It's great to be here. The short answer to that is demand and supply. The thing about Bitcoin right now, the reason this is the best moment in history to buy Bitcoin on a risk-adjusted basis is there's just too much structural demand for the amount of supply in the network. Bitcoin only produces 165,000 Bitcoin per year. Last year, ETFs bought 500,000 Bitcoin. I think they may buy more than that this year. Add on corporate buying and government buying. There is just too much demand. I don't think anything stops the train. We feel more confident about that $200,000 prediction today than we made it in December of 2020. X number of sellers who have been willing to sell around the $100,000 point. Why? Because people are human. Some of that selling has come from FTX. Some of it has come from Mt. Gox distributions, but we think that is running out of supply. Once we break loose of the $100,000 sort of range bound, I think it's blue skies ahead. I think we go to the next behavioral stopping point, which may be 150. Maybe we have to work through that. And then I think we end the year above 200K. Started to shift. Before I came to this event, I was at a major regional broker-dealer financial advisor event. They manage about $500 billion in assets. I had 5 times the number of questions about Ethereum than I had at any conference before that. And the reason was the things you were saying. People are wondering, how do I invest in stablecoins? How do I invest in tokenization? I think as they start to knit that together with what that means from looking down chain beyond Bitcoin, we're going to see some diversification beyond Bitcoin. Bitcoin is still king of the hill. It's still going to attract the most flows, but I think people are probably too skeptical on ETH and Solana flows into traditional financial products. I think it's going to hit up, sort of tick up at the end of the year. But the real story is ETH properly, right? ETH went down, 60% from its all-time highs. If you staked and earned a few percent, you were still sad. So I think most people are betting first and foremost on ETH. The staking will be nice. It will be a reason to buy the ETF and not do it directly, but it's not a game changer. The game changer for ETH is the change in the Ethereum Foundation. The game changer is the success of the Petra upgrade. The game changer is maybe stablecoin and market structure regulation. I would look to those things more than I would the addition of staking if you want to see ETH ETFs go to tens of billions of dollars.
Right.
And they're starting to, but I don't think we're there yet, right? I think that you need to knit together a few positive stories and you really need to see the inflection. I think if we get stablecoin legislation passed, that'll be the next sort of leg in the stool. I think it'll be helpful. Look, I'm very optimistic for ETH long term. I'm less certain in the intermediate term. I think in the intermediate and short term, the story for Bitcoin is very clear, that demand supply mismatch. I think ETH has more work to do. But I do think investors are looking at it as maybe almost a value play in crypto. Those aren't words that we use very often. Often the hype exceeds the fundamentals. It may be the case that the fundamentals are exceeding the hype on ETH. That can be interesting for people with, let's say, a 2-year time frame. Yeah, the best thing that can happen from a macro perspective is us not talking about it and not worrying about it. I mean, the crypto-specific drivers are so positive right now. I think we would be much higher today if we hadn't gone through this crazy V-shaped macro thing. It distracted all of us from the fundamentals being so strong in crypto. So I'm hoping we've entered this more new normal period where the tariff discussions aren't as volatile, where interest rates, maybe we go down 25 or 50 basis points, but we're not going seesawing to 0 and back to 5. Again, the best thing that macro can do is get out of the way because the crypto-specific fundamentals are so strong. I want crypto to be in the driver's seat of where crypto prices are going. I think that's going to happen. And if that's true, it's going to be a great rest of the year. Yeah, I think that's right. Well, I do think we learned something from the April sort of tariff tantrum.
Yeah.
This was the first macro shock where traditional investors could access Bitcoin. If you go back to previous macro shocks like the taper tantrum or the last China trade war in 2018, traditional shops couldn't use Bitcoin as a tool. There weren't ETFs, there weren't regulated futures. People wonder, why did Bitcoin decouple from stocks this time when it hadn't in the past? Because all of a sudden, traditional investors could use it for what it's built for, which is a hedging tool. So I think that's an indication of where we'll be in the future. I think the correlations are going to go down over time and not up. But again, the story on Bitcoin is a demand story of institutions moving hundreds of billions of dollars into this asset. And macro is sort of on the sideline.
You should be crossing your fingers. Good luck to the short-term investors. The challenge in this market right now is the macro forces are so large and they're so idiosyncratic and so unpredictable. We could have a tweet sometime in the next 10 minutes that sends the market plus 5% or down 5%. I think crypto is all about short-term versus long-term right now. Long-term, everything is lining up for a sustained bull market in crypto. We see continued flow into Bitcoin. We see continued loss of faith in institutions. On the Ethereum and other asset side, we see rise in stablecoins, rise in tokenization. All of that's looking great. But of course, we can't look past the short term. So most of us spent our weekend tracking the latest, over and back on tariffs, wondering how much macro chaos there will be in the market right now. I really think investors need to decide, are they short-term investors or are they long-term investors? Those have very different feels in the market right now. And that's sort of the mix I'm trying to weigh myself as I look at these markets. You should be crossing your fingers. Good luck to the short-term investors. The challenge in this market right now is the macro forces are so large and they're so idiosyncratic and so unpredictable. We could have a tweet sometime in the next 10 minutes that sends the market plus 5% or down 5%. I think it's extraordinarily difficult to be a short-term investor in this sort of market activity. So I'd be monitoring the macro situation. I'd be monitoring every tweet coming out of Washington, and I'd be wondering what's going to happen next. Maybe keep an eye on the 10-year interest rate, on the dollar weakening. It's a very difficult environment, I think, for short-term investors. Yeah, I think in the short term, it's signaling just that this is a very volatile market. I think as you extend out a little bit, it can't be positive for the global economy in the medium term. That's what you're hearing from everyone out there. And you're in this difficult situation where we're clearly breaking something in the existing economy. We're clearly slowing down global trade. We're clearly weakening the dollar. We're clearly introducing uncertainty. That is a negative setback. And there's this waiting game to see when the Fed or the Treasury will step in to inject liquidity into the market, will give us a new sort of recovery program. The challenge about us, where we're sitting from a short-term perspective, is all the signaling coming out of the Fed and out of the Treasury is we're not going to do anything. The market is functioning. It may be challenged, but it's functioning. So whether it's former Fed governors writing pieces for Bloomberg, even Janet Yellen adding her thoughts on the market earlier today, they're all saying this is not the responsibility of the Fed and the Treasury. So I think investors are sort of playing this waiting game. When will people come to the rescue? And the people who usually come to the rescue say, not yet. And that, I think, gives us a negative bias in the short term. So if I were guessing, I think there's more risk than opportunity until we see the Fed or the Treasury ride to the rescue. And there's just no sign that they're planning to do that right now. Well, eventually the likelihood is 100%. Eventually they can't resist the big red button. They've been taught over time that when there's market uncertainty or economic uncertainty, you have to come to the rescue with liquidity. I think if we see more challenges in the Treasury market or a disorderly sell-off in the dollar, I think you'll see them step in. So it's going to happen eventually. But I do read from the signaling that it will be slower than many people expect. So this uncertainty could certainly stretch for days, maybe it could stretch for weeks, possibly it could stretch for months. I think we're in for a relatively significant period of volatility in the markets before those forces ride to the rescue. But make no mistake, eventually this is a political game and eventually they will ride to the rescue. It's just a matter of when it will happen, but I think it could take a little bit longer than people have been conditioned to expect in the past. I mean, there are any number of catalysts. So I'm extraordinarily bullish for the end of the year. I think we're going to see a relatively significant decoupling between Bitcoin and equities. I think we're going to see Bitcoin move to new all-time highs. And Bitwise's prediction from December of last year that we'll get to 200,000 on Bitcoin, I think still is plainly in sight. What do we need to have that happen? We need the macro economy to settle down a little bit. We need maybe one of these rescue packages to start to come into the market. I think if we see either of those things, this market is primed to rip. If you look at how Bitcoin in particular has been performing over this market pullback, it's done significantly better than in previous stock market corrections. Usually when there's a stock market correction, at least for the last 10 years, if the stock market is down 10, Bitcoin is down 30. Instead, this time, Bitcoin is more or less keeping pace with the equity market. To me, that's an incredible sign of resilience and strength. 2 years ago, if I told you that the global economy was falling apart and Bitcoin would be at $84,000, you would have laughed at me. And yet that's what we're seeing. So as soon as we see some signal that the economy is going to stabilize, that macro will get out of the headlines, I think we'll quickly be to new all-time highs. And if we do see any sort of stimulus or the Fed or the Treasury stepping in, I think it's off to the races and on towards Bitwise's $200,000 target. Yeah, it's pretty unbelievable. I entered into Google to figure out what happened in 2018, and it said that the market pulled back due to Trump's tariff wars, weakening dollar, exactly the same things that we're living right now. And I think that's important for people to remember. We have been through these sort of market crises. We have seen what happens in the crypto market. Look, crypto is in a generational multi-decade bull market. We can have these short-term challenges that set us back, but long-term, the forces powering this industry forward are going to overcome and overwhelm that. So it was fun to flash back a handful of years to the previous Trump presidency and see that, we have experienced this before, and there is light at the end of the tunnel eventually, right? Gold is a proxy for current demand for hard money assets, for store of value assets. When I look at Bitcoin's addressable market, I assume it's going to match gold in about 5 to 10 years. So as gold's addressable market goes up, the long-term price target for Bitcoin goes up as well. The reason Bitcoin is down is because it's both a hedge asset and an emerging risky asset. So what we've seen historically in the short term, when there's market volatility, you see Bitcoin pull back with all other risky assets. But in the long term, it catches up and then some. So every time gold sets a new all-time high, I cheer. It means that Bitcoin's ultimate all-time high is ticking up. It used to be 800,000. Now to match gold, maybe it's 1.1 million. I saw today there's a prediction gold could go to 4,500 out of, I forget, it was Goldman Sachs or JP Morgan. If that's the case, you're talking about 1.5 million Bitcoin. So gold sort of forecasts the direction Bitcoin is going long term. Again, we just need this market risk to stabilize a little bit, and you're going to see Bitcoin catch up and then some. Yeah, I think 5 to 10 years is about right. I think 1 or 2 more cycles. Look, a few things are true. The vast majority of people who need to own Bitcoin don't yet own it at all. We need $1 trillion of buying into the Bitcoin market for institutions to just level up to a neutral portfolio. I think there's no way that happens without pushing Bitcoin's price up significantly. I'd also say, having watched various technologies over the past 20 or 30 years, everyone's always skeptical of the digital version of analog goods. But find me another industry where the digital version didn't just catch up, but eventually surpassed the physical good. It's happened in media, it's happened in advertising, it's happened in movies, it's happened in streaming. It's going to happen in store of value assets. So how long could it take? I think 5 or 10 years, right? Remember, 10 years ago, where was Bitcoin right now? It was 2014, it was trading for a few $100s. Today, we're talking about $100,000. It's not that hard to imagine that in 10 years, it's easily at $1 million or more. I think it'll happen by 2029, but it could be anywhere around then. But all the trends are pointing in that direction. I think this remains the best risk-adjusted time to purchase Bitcoin in its history. We've removed a huge amount of risk. We've removed custody risk, trading risk, regulatory risk, government risk, and yet we still have 10x upside at a minimum. To me, that makes an extraordinarily positive expected return from a risk-adjusted basis. I think any investor who doesn't have Bitcoin in their portfolio should take this pullback to establish that first position, at least get to 1 or 2% Bitcoin, maybe 10 more if you're more bullish. The other place that I find extraordinarily attractive right now is all the way on the other end of the spectrum at the DeFi protocol layer. I continue to think we're setting up for another DeFi summer at some point. You look at various statistics, they're already at all-time highs. Those are proven programs. And if we get regulatory relief, I think there's a lot of value in some of those DeFi-specific protocols. So a barbell strategy that's Bitcoin and then a handful of DeFi protocols, I think would be extraordinarily well positioned for the rest of the year.